Hey, ladies and gentlemen, this has been the worst and the most tumultuous week that we have seen since the 2008 global financial crisis, since the week of 19th of February 2020 during when the pandemic hit itself. So, what should we as investors do during this period of major uncertainty and tumultuous period? In this video, we're going to explore with you how to train yourself mentally, be prepared physiologically, and understand psychologically to prepare and withstand this major uncertainty. There are four lessons, ladies and gentlemen, that I would like to share. From my 40 years of experience directly in the markets, when I used to be the head of um, investment research at Nikko Securities way back in 1994. And then subsequently, I went to work in Wall Street. And then subsequently, I became head of institutional sales in three major stockbroking houses in Singapore. So, in my 40 years of industry experience, let me share with you lesson number one. That is, in times of tumultuous periods like now, the and major uncertainty, the only certainty is yes, you are right, ladies and gentlemen. More uncertainty. Now, let me give you an example. This week, for example, the people were configured and confused as to whether Credit Suisse, the major Swiss banker, would go under. Now, that actually emanated from the announcement or the interview that they had with Saudi National Bank, where the press quoted the president of the Saudi National Bank, one of its major shareholder, that they will not be committing more funds into Credit Suisse. But in the same vein, the interview conducted, if you do watch the interview, is the fact that the chairman of Saudi National Bank believed first that Credit Suisse, number one, does not need support. It's already strong enough. And three, they have kickstarted their transformative program, in a way to achieve their target objectives by the time objective by 2025, as laid out in a rescue plan that they had when they raised funds and became its major shareholder in October last year. Now, what actually spiraled out of control is that the press keep on reporting that essentially they are not putting in more funds, and this means that essentially that causes run panic. Now, so in situations like this, ladies and gentlemen, like in past crises in the last 40 years that I've experienced, one of the first lessons I learned is understand the perspective and facts, not the opinions, ladies and gentlemen, not the press uh, rhetoric of the headlines. Because in times of grip crisis where you are affected mentally, physiologically, and psychologically, it's not surprised that you have so many headlines to read. You run through all the headlines, but you miss the facts. So, ladies and gentlemen, do not miss the forest for the trees, or rather, the other way around. Now, so essentially, it is very important in a time like this to prepare yourself mentally, physiologically, and psychologically to look at the facts and the perspectives, not the opinions, not the headlines. The second, ladies and lesson that I like to share, ladies and gentlemen, from my past 40 years as head of research previously and working in Wall Street and being institutional head in several stockbroking houses is this. In a period like what is happening now, the key thing is everybody is panicking. So the advice is don't panic. Now, one learned person, actually says that the time to get rich is when everybody is panicking, right? And the only one that actually will survive is the one that remains sane. That means not mad. Now, in a chaotic market like right now, it's not unlike fighting in war, you know. And one of the key things, for example, when I first, I would actually say is the baptism of fire when I first entered the market way back in 1987 was the fact that we had a major one-day crisis. And that was actually 19 October 1987 when the market crashed by 22.8%. I vividly remember the day. Okay, I was a rookie investor at that time. Now, at the end of the day, and at the end of the month, at the end of the year, that means way back in 19 October 1990, 1987. What happened? Right? Did we get the reason why Wall Street crashed? Yes, there's a myriad of reasons. Number two, did we get a higher year-end closing? Yes, we did. So was all the doom and gloom necessary? It was the greatest fear that gripped my experience, in that week of 19 October 20, 1987. That's still very much embedded in my own experience. It has actually shaped my experience in investing. So one of the key things that I would like I offer and profit is don't panic. Now, what does don't panic means? Don't panic means, ladies and gentlemen, that understand, the facts and how facts, actually shape the things to come. Not the opinions of so-called experts or professional. Now, even after 40 years in the market, I'm still giving interviews in Lian Zapao, Business Times, and a few media like Bloomberg TV, as well as actually Channel News Asia, CCTV, NITV. Okay, so one of the key things that I always tell all my in my interviews is to provide the basis, provide the reasoning before I arrive at an opinion or before I arrive at what I think a forecast would be. Now, I don't actually call forecasts or opinions based off nothing. I've always centered on the fact that my past experience, as well as basically how the facts shape up to point to a certain direction. And that's what, even up to this day, in my firm GCP Global investment classes, which we hold every quarterly for our REIT investors, this is how we shape our opinion, shape our forecast. And more importantly, is that we try to preempt scenarios based on what the facts are pointing, rather than to talk about the facts after the milk has spilled. The perspective, ladies and gentlemen, that I like to share is the fact that while it may all seem doom and gloom at this moment in time, there's always a good silver lining, in any crisis. That's why in Chinese we say a crisis is a 危机, but you can always turn it around, make it opposite, because the opposite of 危机 is 对了，就是机会。So if you are sharp mentally and psychologically and physiologically well grounded, like what we train our GCP global students in our investment classes, you will understand that there's always a good silver lining at the end or towards the development of a particular crisis. So, what is some of the silver linings that you're seeing now? Well, you notice that one of the key things that has been bad for great investors in just 2 weeks ago, the 2 year bond yield was above 5%. It's the highest ever since 42 years. Last week, because of the impending collapse of all the S Bank, there's Silicon Valley Bank, Signature Bank, right? You saw the 2 year bond yield crash 100 basis points to 4%. And then commensurately, the 10 year bond yield fell very sharply from 3.9% down to 3.7, down to 3.5%. Now, this has actually, and now you look at as of last night, it is clear that the bond yield has recovered a bit because there are more greater confidence now that essentially the contingent on European banks and US banks, would may be well contained by the authorities like S&B, like the authorities like FDIC, Federal Reserve. Because I think these authorities, they have learned well enough from past crises how to ring fence, how to react quickly. For example, in the previous global financial crisis, the global financial crisis in 2007 started in 2007, but it wasn't even well contained until one major epic day on 15 September 2008. Yes, I still remember that day when the Dow fell 777 points. That is when the authorities then came in to help to bail out, Bastards after Lehman Brothers have collapsed. So essentially, look at the pivotal point. Okay, there is silver lining when there is a crisis, and you can see that this time round, the falling off, and if the 10 year and the 2 year bond yield continues to fall off, Then it will set a very interesting stage for next week when the Federal Reserve comes in to announce whether they will actually increase interest rates by a quarter percent, 50 basis points, or not at all. Something to watch about next week. Last but not least, ladies and gentlemen, from my experience, after all, I managed to use the last and ride the last crisis well, way back in 2008, and made enough money, and that's why I retired in 2009. That's why in 2010, henceforth, we began our quarterly REITs investment classes, and we donate the proceeds from these REIT classes to our favorite charities, which you can see in our Facebook in GCP Global. So the fourth lesson, ladies and gentlemen, is that there are money that you can make. If you know how to strengthen yourself nice and well in a crisis like this. That's what I've done. And it's something that I would like to share and be able to update you. But most importantly, the key thing is that to fight a battle now, you don't need to be too smart person. It is not intellect that wins. It is emotionally strong, mentally well adapted, and physiologically and psychologically well prepared that will be able to help you to ride the silver linings in this crisis. When will this crisis end? How long will it last? Ha ha ha, ladies and gentlemen. Remember rule number one: in a major uncertainty, like right now, the only thing is certainty, uncertainty rather. Okay, so what is certain is that there will be greater uncertainty. All right, so those who profit reasons as to when they will end, as I say, understand the facts and see where the facts are pointing to. Don't just look at the headlines, but understand the key thing and the perspective in which things are being presented and developed. Hope you enjoyed this week's video, as well as basically hope that you can retire like me, young and early, and help to give back to society. So remember, strengthen yourself physically, mentally, and psychologically. Till next week, then.